Everyone to stick with us versus Herd. I want to cover what's going on this week. We have a big week ahead of us with earnings season kicking off, and we have the CPI data. I mean, in terms of the market today, the market, just headed straight down for the most part. We at the very beginning of the day, we just went straight down. Then it looked like it was going to do a V-shaped recovery, and then it gave it all back. And the bulls just couldn't do it. But looking forward into this week, the big day is going to be on Wednesday. Now, like between right now and Tuesday, July 12th, we may not get a lot of action. Today I thought was a lot more action than we were expected to see. Was just a lot of action today. Tomorrow might be a little bit thin, before we come ahead on the core CPI. And just like last month, the White House warned today that they're expecting inflation to be worse, just like they did last month. And what was it? The number was way worse. Looking at what we had the last reading was at 8.6. So we went from 8.3 in April to May to 8.6. Are we getting 8.8, 8.9? I'm not sure right now. Expectation core CPI is expected to hold steady. However, the White House did come out and say hey, we're expecting it to be worse. Now, we'll kind of see what happens. Retail sales on Friday. So, and then we have obviously the initial jobless claims on Thursday. So just be careful this week. I'm going to go over some charts here in a second, but this week, just be careful with CPI. That's all I'm going to say. Take your profits. If you're not sure, don't trade. Take your profits, rinse and repeat. If you miss a move, it's okay. We're in a market. BlackRock said today they're expecting heavy volatility going into the end of the year, which obviously I think they're right on the money there. So earnings this week, we are going to be having, starting on Thursday, Morgan Stanley, JP Morgan. Obviously, we have the rest of the banks, Citi, BlackRock, PNC, Wells Fargo, and then United Healthcare on Friday pre-market. So just be mindful that things are going to start taking off in the next week. The following week here, we're going to get IBM in here, Netflix, Tesla. So we're going to get some big tech stocks start to report earnings starting next week. The banks are starting this week. So just be mindful. Keep your powder dry. You're going to need it. In terms of the charts today, like I said, we were all over the place. We did hold the 10-day moving average on the NASDAQ right here. However, it wasn't pretty. And the one thing that I was looking for on the NASDAQ, let me pull up NQ here. One thing that I was looking at was, can we break the 50-day moving average? And you know what? It didn't. It did for like 3 seconds and came back down. I was looking back, if you guys look at my past videos from last week or the week before, I was looking at a 50-day test, and we tested it back here in April, we tested it back here in March, and we tested it back here in February of the 50. Actually, we didn't. That was a 200-day. Sorry, my bad. We tested it back here in March. We tested it back here in April. And ever since then, we have not been able to get back up the 50-day moving average. Now, let's be honest. The bar right now is way lower than it was back in here. Right now, the 50-day moving average is about 12,139, right? Up in here, when we tested last time, the 50-day moving average was over 14,000. Again, tapped it, got rejected, and we had another flush. So the question is, are we going to tap it again, have another flush, or can we kind of stabilize here and bounce right out? If we look at the S&Ps, let's pull up the S&Ps right now. S&Ps did not test the 50-day moving average at all, and we haven't for quite some time. The last time was back in April. This is back when the S&Ps were starting to hold back in March and April. Everyone was like, Jim Cramer was like, oh yeah, it's a little dip, V-shaped recovery, it's gonna be okay, buy, right? And what happened? All those people are now bag holding above 4,500. Right now we're at 3,800 on the S&Ps. So just because someone has a lot of followers, and myself included, I make wrong choices all the time. I make wrong moves all the time. I make money, I lose money, just like everyone else. We're all human. But I think we need to be mindful of where we are. We're not able to break major trends. Now, back in here, to be fair, back in January, we had a major dip and people were like, oh yeah, we found the bottom here in March, and they started buying right up, because that's what we've always done. That is the MO, right? We drop quite a bit, we come back up, everything's okay, we get back up, target 5,500 on the S&Ps. I mean, that's what some people are 6,000 or over 5,000 is some people's target. Is still now some people are thinking we're going to hit over 5,000, which, I mean, that would be a blessing. A blessing right now is, can the S&Ps get over 4,000? I don't know. I don't know. That's kind of where we're at right now. We had some crazy stocks. I mean, Tesla with the whole like Twitter buyout and not buyout or whatever they're doing right now. I mean, the market did not react well today. I mean, Tesla was down $49, almost 7%, over 6.5% today. I mean, back when they thought they were running it. Now, look at the box that we're in here. I mean, Tesla is with or without the news, Tesla has been range bound. We've been coming up testing the 750 area over the last couple months, and now we're headed back down. Right now, I feel like Tesla is range bound, and it's just kind of sitting there. And it's not doing that bad, honestly. I mean, it could be doing way worse. I mean, it could be doing something like if you take a look at like Peloton, hit $8, went down from 127 down sub 9 today. I mean, it's only 20 cents off the lows. Apple is actually not doing bad either, I feel. I mean, it has reclaimed the 50-day moving average. Now, none of this is investment advice. This is just for entertainment purposes only. So, don't trade off of this. But I do like how Apple has reclaimed the 50-day, and it's holding. I mean, it wasn't pretty. I mean, to be fair, I mean, if you look at today, I mean, it tried to rip, but it just gave it right back up in the afternoon. Now, even with that being said, it is still holding the 50-day moving average. So Apple, I mean, I guess people don't really have much else places to park their cash. You know what I mean? Like, they don't have anywhere to go right now. And Apple, I mean, cash-rich Apple is, where people are parking their cash. It's kind of interesting to me how, everyone was like trying to invest in these unicorns that were losing money hand over fist. But now we're in a period where we're going back to fundamentals, back to the basics. We're like, hey, Apple can weather the storm. Apple can weather a recession. Apple has a lot of cash on hand to weather the storm. Let's invest. Hey, guys, that's a great idea. You know what? That's worked for Warren Buffett time and time again. That's worked for a lot of people. But, back in 2020, 2021, you were called dumb or stupid trying to invest in a boomer stock, right? However, these boomer stocks, like Apple's moat, you can call it, and Netflix, the barrier to entry right now, there's a lot of competition. I mean, if you look at Netflix or Disney Plus, I mean, Netflix has been decimated, and they cut back on their content. And the thing is, like with Netflix, if you cut back on your content, what made you original in the first place, like Stranger Things, Umbrella Academy, different movies, and you start peeling that back, you laying people off, which we're starting to see now. I mean, Netflix had some major layoffs. They closed down some divisions, like their animation division, and right now Disney is eating their lunch. Now, I wouldn't say like Disney is like killing it right now. Disney, I think, is going to be a value stock here shortly. But what I want to see kind of like for a stock like Disney, because Disney has exposure other than the entertainment, right? I mean, they got the entertainment on lock. They got Disney Plus is crushing it. Obi-Wan, they got the new content coming out. Honestly, I think it's probably a little bit too much content, to be honest with you, because we can't even consume all this content. There's so much content. But I think they're kind of trying to price in like travel being down with the theme parks and the hotels. Otherwise, I think Disney wouldn't be doing that bad. I mean, to be fair, I mean, they're down 50%, which is bad. It's pretty bad. But, is this a bottom? If we're headed towards or in a recession right now, probably not a bottom. So I just wanted to kind of prepare you for this week. Just be mindful where you're at. Keep some cash. If you're not sure, don't trade. As always, stay safe, stay green. It's us versus herd.